All right, everybody, ladies and gentlemen, hello and welcome to us here at Nadex. Sorry for a little bit of delay. Nothing like to start the new year than with some technical issues, but we've sorted those hopefully out right now. I would really appreciate a very short yes or why if you guys can hear me well, just to make sure that those sound issues that we just had really have been sorted out. Yeah, welcome to us here at Nadex for the new year 2019. My name is Philip and I will be your presenter for today's webinar. And yeah, just like always, put those questions into that small questions box. Perfect. Ludmila, thank you very much for the kind feedback already. Yeah, if there are any questions, guys, please put those questions into that small questions box. I'll do my very best to answer those questions as we move through the webinar. Just a second while I try to sort out my interface here. All right, looking good. Just a moment. And we're good to go. All right, sorry for the confusion here. All right, before we get started, of course, you already see those first risk disclaimers here. I have to make you aware of those. So please take a moment of your time to read through those carefully and make sure that you are okay with them. Essentially, of course, trading involves risk. And you want to understand those risks before you put your money on the line. So you want to understand the markets that you're trading, you understand the instruments that you are using. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are therefore only shown for educational purposes, especially true for the live part of this webinar, which is pretty much the whole webinar. We will be looking at the markets together. I've brought you guys 3 markets, which I think are rather interesting right now with potential trading opportunities maybe setting up. And yeah, but it's just me telling what I see on those charts. I want to teach you guys the way that I'm looking at those charts. Maybe you think in the same pattern, you think it's along the same lines, perfect. Then you arrive for yourself at that conclusion that there might be a trading opportunity, or I might be the perfect contrarian indicator for you guys because you say, no, everything Philip is telling me, I just don't see it. I just want to take the opposite side. Perfectly fine as well. Everything that we do here is really just for educational purpose. So please make sure you're okay with that. And that being said, here is the Nadex risk warning. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, what is today's agenda? Very brief recap. What are the benefits of trading binary options and call spreads? And then, of course, main part, looking at the markets together, analyzing those markets and charts and seeing what the markets are doing and doing right now, and maybe stacking the odds in our favor, trying to get an idea about what might be coming up over those next few days, weeks, and months ahead. The idea here is that we want to utilize those vehicles under different market conditions. And yeah, just as the beginning of the new year, let's get a look at the big picture and try to understand where those markets are going. So I think most of you guys are already seasoned professionals here and regular attendees with our webinars. And so I think we can make these benefits of trading binary options and call spreads rather brief. We have other webinars covering those topics with much more detail. Let's kick it off with binary options. The idea here is that we want to understand if the market, we have to have an idea if the market will be above the strike price of that binary option, yes or no. And with call spreads, the question is where within that range between the floor and the ceiling level will price of the underlying market actually be. The big benefit of both of those instruments, something which I so much appreciate, is you have always a clearly defined risk exposure on your trades. The very moment you enter your trade, you see in the order ticket, in the deal ticket, you see what your risk exposure is. And this is true both for binary options and call spreads. The next huge benefit that there is, you can trade many different markets here at Nadex using those instruments, and you can trade those markets with very little capital requirements, low collateral required to trade. You have opportunities because those are options. You have opportunities when the markets are moving, when we have volatility in the market. But also if the market is flat, you can also profit from this type of market environment. It's completely your call. Which type of environment do you want to trade? What do you want to focus on? Multiple daily trading opportunities, different expiry cycles for those different instruments and different markets. So pretty much we have another slide coming up. From Sunday to Friday, around about 23 hours per day, you can trade those markets. So if the trading bug has bitten you, definitely you have enough opportunity to trade those markets here at Nadex. Same thing pretty much is also true here for those call spreads. So I think we'd rather jump directly into the charts. Quick reminder, guys, if something is not clear, if something is done too quickly, I know everything that I'm telling you. I'm doing it for you. So please let me know if something is not clear. I'm more than happy to re-explain again and again and again. And I want you guys to learn something and to get some kind of insight and idea about what the markets might be doing and my style of trading, to put it that way. So let's quickly have a look at those charts here. Let me quickly check my screen, but yes, this is looking good. All right, first market to kick it off would be gold for me. Gold is rather interesting right now, and we're looking here at gold on a daily chart, and if we just zoom out, we can see. And one thing is, you don't necessarily have to go to the weekly chart or the monthly chart to have a look at the higher order time frames. Just zooming out like this, it becomes pretty obvious where those significant levels in the market actually are. You can just eyeball it, and it's nothing that we have, or you don't have to focus here right now really on the precise point, 1 point more or less. No, it's the big picture here. And this big picture, clearly you can see that the market has adhered to those different price levels that we see here on those on that chart. We have the orange level here. We have broken above this level here recently. Then we have this purple line, and the nice thing about those horizontal lines is those are leading indicators. I know it's just a simple horizontal line, but just understand you were able at least or latest to draw that purple line, let's say latest here when the market came back to touch this level, and once again and once again. And from that point onward on in time, you had those lines here on that chart. And the nice thing is those are horizontal lines, which means the price level stays the same, which make them rather easy to act upon, much better than sloping trend lines, normal trend lines, connecting the highs and lows in trending environments. Leading indicator, I know that if price is approaching this level, there's a decent probability that the market will react to those levels. And so you can see where those levels are coming from. And now I'm zooming just back in again. What is it that we can see here on gold, for gold on the daily chart? Well, we've broken above this level. Price has been pushing higher. Price has been pushing beyond this purple line. But now here around about 1,300 points per troy ounce, we have encountered some resistance because there is this level. Price touched this price level, and then price started to pull back a little bit. We saw smaller candles contracting volatility. Then we saw another big candle, huge red candle here on that day. The candle didn't close as bearish as I would have expected it. In the end, it's a rather indecisive candle. Yes, it's still bearish, but please see and note the long lower shadow here, which renders that candle much more bullish than we would initially anticipate. However, what is gold? Or what might gold be doing next? That's the big picture that we're seeing here. And if I start to bring out here my Fibonacci retracement tools, I'm picking the most recent swing point low, and I'm drawing it to the most recent swing point high. and we start to see that the sweet spot for those FIB retracements, which is between the 50 and 61.8% retracement, our level here is sitting almost perfectly in the middle of that range. So if I think that price might be about to pull back, maybe to catch its breath, to go for another test of this 1300 level, it wouldn't feel out of the ordinary for price to catch its breath right now. And so if I assume that the market might be pulling back, this level would be a natural target for this pullback. And now I get further indication that this truly might be a viable target by that price level also sitting here very nicely in that FIB retracement zone. Next thing, I'm using my FIB retracements once again, but this time I'm going from the previous swing point low to the very same swing point high. And obviously, guys, that's the swing point high. I'm just drawing it further here so that I get further extension and further pictures here, and that the lines and graphic is just extended here. So what do I see? Now I can see that the 38.2% retracement is almost sitting perfectly here on top of the 50% retracement, adding further weight and further information to this retracement here at this level. One more thing that I can do is I can add a further FIB retracement. Now I'm going here really for the most recent low, that the biggest low or the lowest low that we had here. And we start to see a 38.2% retracement is clustering here with the second order 61.8. So this might be another area where price might be pulling back to and might be attracted. First target, however, very clearly and obviously is this area roundabout here. Now, one more thing, another form of leading indicators that we like to use are pivot points. And those pivot points usually are being used by traders using yesterday's data to calculate today's pivot points, support and resistance levels. However, you don't have to use yesterday's data or today's data to calculate tomorrow's pivot points, another leading indicator. What you can also use is the price data, open, high, low, close of last week, of last month, of last year. And if we draw those pivot points in here, we start to see that the weekly pivot point, the S1 support level here, also is sitting very, very closely here in that cluster. So I have another reason to believe that this price level has some significance. And if I use the monthly pivot points, and they use really the P pivot, the true pivot point, I can see that this clusters pretty much perfectly with this level here as well. So all those things coming together give me this idea that price might be pulling back towards this level here. Now, how this could be traded is completely up to you. First, it's up to you if you think that that analysis might make sense. Next, it's up to you if you want to trade it and how you would like to trade it. An aggressive type of trade could be to say we're looking for a potential pullback here, and we already want to profit from this pullback. And so the idea might be to say, all right, that pullback area is something between 1260 and 1265. I could be shooting for this level. For example, with a weekly binary option, I could sell something along the 1262 strike price right now for probably something around $85 per contract. I know that if we pull back towards this level, and if that option or if the underlying market is trading at the strike price of that option, price should move somewhat close to 50. So I have a very limited risk entry right now. If I'm able to sell this contract for 85, my risk per contract would be just $15. If price is shooting towards 50, I could already make a potential 2-to-1 profit target here on this pullback. That's just one way to trade it. I have to understand this is on the daily chart, a counter trend trade. It's a rather aggressive way to trade the market. You could also say, no, I'm waiting for this pullback to occur. And then I want to see that the original trend resumes. and that we will at least get another retest of this 1300 level, and then you could be looking at potentially buying a contract here once you think that this pullback might be over. I prepared very nice examples here direct on the Nadex platform, but sorry guys, due to those technical issues before, yeah, those went away, and we have to do it verbally now. So sorry about that. Guys, any questions here considering this gold chart? Just let me know. Use that questions box. That's what we're here for. So please don't be shy. If there are no more questions considering gold and the type of analysis performed here, and guys, by the way, just eyeballing here, we have strong convergence with both MACD and RSI, which is why I feel that ultimately price should move beyond this 1300 level, and we should see some bullish momentum in gold. Just another idea here, and the trend on the daily chart is currently really looking nice and strong. It's just that I feel a temporary pullback might occur, and why always wait for the big picture if we can already participate in movements here on that smaller scale. So much for gold. Next chart and market that I would like to cover would be crude oil. Crude oil on the daily chart once again, and once again, let's just zoom out here. And you can see that crude oil, while very bullish before, turned very bearish again, and now it's all back pretty much to where we just came from and started from. And please see this level here at 42, 42.50, something like that, defined here, tested again there and there, here acting as resistance, here acting as support again, support, support, support. And once price really came back and dropped back into this trading range where price was for so long, where did this pullback actually stop? It stopped right here at this 42.50 level roundabout. I don't know. This is so beautiful. I really feel joy when I see charts like that and this analysis working so predictable. Not predictable as in I can make a forecast and it's 100% true, but rather I can make a really educated guess. And if I make that educated guess very often, I should be able to win more of those trades. I should have more potentially profitable trades on my hands than losing trades. And if I do my money management correctly, just as I outlined before, that if I can take a 15-point risk on one trade with a potential 30-point target move, that's a 2-to-1 reward to risk ratio. Those two components coming together, this is how we make money in the market. Now, price has pulled back on the daily chart. Is it still the perfect bearish setup? No, it isn't. The 10-period moving average has already started to close down. We're pulling back. However, this pullback took us right down and beneath this small level that we're seeing here, acting as support here, fallen below, now testing this level, and we're testing this level already here for the second day in a row. First candle, it's a rather bearish candle, despite it being green. Why is it a bearish candle? No lower shadow, but a long upper shadow. And this long upper shadow tests this level. Next bar today is currently an inside candle, an inside bar. We're testing this level again. But you can see this candle is completely contained within the size of the previous candle. Another idea that volatility is going out of that market. And if we start to connect those highs here, I hope you can see that actually it starts to top, it starts to flatten out. And that's the idea here, that we can start to see, all right, maybe price tests this level once more, but then might be going for another retest of this lower range level here. So the basic idea for oil over those next few days for me would be to see, all right, price might be testing this level. I see a decent probability that we might go at least for a retest of this level. Do I think we will truly test this level perfectly? No, I don't think so, because we do have a rather strong divergence here, both in MACD and in RSI setting up. So while this lower low in price, while we had a lower low in price, we did not get confirmation for this lower low in our indicators. Our indicators instead made a higher low. Why is that the case? Well, you see that price dropped here for quite some time, and it dropped rather steadily, and at least not slow or slowly. It moved, and if we got a pullback, this pullback took us here maybe 4 or 5 bars, and then the session and the momentum continued. However, here in this part where we established this short-term range here, this has been going sideways for at least 10, 15 days. And that's the reason, I'm pretty much, yeah, more than that, yeah, pretty much for all of December and then some more. This is where we lost momentum. Here we had one, let me try to draw that in. Here we saw this momentum in the market down. But now price instead just went a little bit sideways. And therefore, here we had speed. And that speed was lost during that sideways phase. And now the question is, once we started our next leg lower, which was again decently paced, there was some nice momentum going on here as well. And sure enough, both MACD and RSI definitely also started to push lower again. But just compare the length of this sideways phase with this, both the distance traveled here and the time spent. This just was not able to make up for this loss of momentum that we saw here. And for that reason, MACD and RSI failed to make new lower lows. And this is how we see divergence here in this market at that point in time. So my idea would be the price might be shooting here for potential pullback. How far does this pullback go? I don't know. Nobody knows. Nobody has a crystal ball. What we can do, however, is once again use our fib retracements, go from this swing point low to that swing point high, to that level. And we can identify the 38.2 and 50% retracement. And what I always like to do is I always like to search for potential clusters with my fib retracements. And if we think that this already qualifies here as a higher low, and this might qualify as a higher high, I'm not saying that that's the way I would read it. I can understand if you arrive at that conclusion. This is just too shallow for me to be a pullback. But let's just assume that was a pullback and go for that same level here. We start to see that this 50% retracement clusters with a 38.2. And so my plan of action would be, sorry, I was looking for my simple, I was just looking for my rectangle. Here's the rectangle. I feel that this area here might be at least something that should be reachable for a pullback going on in this market at that point in time. Is this a very deep move? No, it isn't. We're talking from pulling back from around about $50 to around about $47 per barrel. However, we don't have to trade this on the daily chart. We can drop down to the 15-minute chart. We can drop down to a 5-minute chart. And once I see that this pullback, that a downtrend is going on those lower time frames, this is a potential profit target or potential price target that I can use for this move going on to maybe shoot for a rather aggressive reward to risk ratio on my trades. It's good to have this is like a map of the market, a map of the territory. And here I'm seeing that this is a potential target. Will it happen like that? I don't know. But it's an educated guess. More potentially profitable trades than losing trades, and winning bigger on those potentially profitable trades than the losses. And we will always have losses. Two components make us successful traders in the markets in the long run. So that's currently what's on my watch list here for crude oil. Potential pullback here towards this 47 area. And from the current range of the market, this could be a one-day move, could be a two-day move. If the market is going down, usually it's going down fast, and therefore probably rather a one-day move. However, price could still shoot up here. Nobody knows. It's just, I currently think I have identified multiple factors that we might at least see a pullback to this area. So that's currently my big picture here for crude oil. What's the really big picture for crude oil? Well, we are now just really back in this range of 42, let's say 44 to something around 54. And we stayed in that range for a very long time. You see 2015, sometimes dipping below it, sometimes pushing a little bit above it. But overall, we are back in this huge range. I feel that this range is acting like a big magnet and is really pulling the markets towards it. And unless we really have significant momentum to leave that range again, I would be shooting for a range-bound market here over those next few weeks and probably months ahead. All this momentum here to the upside was pretty much lost, and yeah, that's just me. That's just my guess. My guess is as good as yours. Just with the next market, I would like to focus on the S&P 500. Do you have fundamental beliefs about that market? Well, yes, you can. You can have those fundamental beliefs. Do I think that it's good that the central banks have been printing money, crazy amounts of money, since a long time? No, I don't think that this is good. Do I have the feeling that the market is currently rather stable? No, I don't have that feeling. But those are just my opinions. Those are just my feelings. And I learned for myself that trading based on feelings is not at least the way for me to make money in the market. I want to trade from what I see on the chart. And this can be a tough call. This can be a tough call because you want to be right? But being right doesn't make you money in the market. You want to make money. Forget about being right. Forget about this basic idea what Congress should be doing, what the president should be doing, what the Fed should be doing, what other countries should be doing. I trade what I see on those charts. So what is it that I see here on the S&P 500? Once again, let's zoom out here. Huge move to the upside. Some big volatility coming into the market here, beginning of 2018, next leg higher, but obviously that has pretty much changed here now. We tested this level, established here before 2,600 several times, then finally significantly dropping below this level. And guys, I hope you can see that those levels really are very simple to draw. You just eyeball it. Yes, there was a touch here. Yes, we saw reactions to this price here and there. And pretty much here, when we tested this level again, you knew something was about to happen. When this level finally broke, we had high probabilities that this wouldn't be just a drop of 2 ticks, 5 ticks. No, this was a huge break. The more obvious this level is, the more obvious this level is on higher time frames, the more significant this level also is. What's the big picture here? Once again, I like to use my FIB retracements and just putting those on here. From this drop here, which was November 2016, we have now just hit the 50% retracement. We dropped below the 61.8 and now we're pulling back towards here. And I hope you can see this cluster, 38.2, sitting perfectly on top of this 2,600 level, giving this level, once again, more significance here for me, for my further analysis. What do I like to do? I like to use my fib retracements to search for potential clusters. So this swing point low, and once again, all right, so this area here tends to cluster. Next cluster that we can see here, all this is lining up really, really nicely to give me at least this idea that those levels might be significant going forward. Will price drop down now? Is everything coming to an end? I don't know. I just feel that we have, let's look at the really big picture here. We are just looking at this section here. If we go to fib retracements back here to 2011, back to 2009, there is much more room for prices to drop lower. Obviously, this whole area here where we were topping out, again, very significant. I feel the price will have a hard time to actually drop below this 2,100 level. However, anything can happen, anything goes. What really disturbs me is that we now just have seen a little bit of price pulling back, a few bullish sessions, and everybody has switched back again into complete bull mode. And this bullish assessment, I don't see it on this chart. Yes, the daily chart, this is a high, this is a higher low, and we're now making a higher high. So the trend on the daily chart has switched to an uptrend. Is this good enough for me to just jump into the market right now? No, it isn't. The big picture, we're just approaching this level. My moving averages are still completely fanning here to the downside. 50 above the 20, above the 10. Yes, it's closing down, which confirms that on the short term, we are seeing this pullback and the trend has changed on the daily chart. But let's just have a look here at the weekly chart. What is it that we see on the weekly? Yeah, this is just the pullback here towards price equilibrium levels. And remember, we can use the 10 and 20 period moving average to help us to spot those price equilibrium levels. Also, once again, we can use our fib retracements to spot those price equilibrium levels. And here you can see this level is sitting here currently from this pullback or from this high. We can see the pullback, this level is sitting here just above the 50. And if we go for another pullback from this swing point here to the same low, we start to get once again clusters here 50, 61, 8. So all pullbacks here towards this whole area of 2,630, 2,600, all in this area would be, from my point of view, perfectly normal for a downtrend on the weekly chart. This is just a pullback here on the weekly chart. So definitely not something tradable for me on the daily chart. Remember, I want to have multiple time frames in agreement. I want to see that the daily chart is telling me the same story as the weekly chart and probably also as the monthly chart. And the weekly chart is now just in pullback mode in a downtrend. The daily chart has switched to an uptrend, so there is no confirmation going on here. Way too little happening right now for me to consider the daily chart to be absolutely bullish and something that I'm dreaming about. Let's have a look at the monthly chart, and I hope you can see, and let's get rid of those fib retracements here for a moment. I hope you can see that even on the monthly chart, yes, we still have this fanning pattern to the upside. 10 is above the 20, is above the 50. However, the trend on the monthly chart has changed. We are no longer in an uptrend. Why? Because this was a swing point low. This maybe could have been a higher swing point low, but this clearly here is a lower low, both compared to that one and that one. So sure enough, it's no longer an uptrend on the monthly chart. What is the trend on the monthly chart? Personally, I don't know. I think a move of just 1 or 2 candles is not enough to actually make this good enough for me to call this a lower high. If your way of reading the charts is that's a lower high, perfectly fine, but stick with it. For me, this is no, it's just 1, 2 candles, that's not enough price action to actually create a trend, at least for me. But clearly, this is a low, a significant low, and a lower low than that one and that one. So I have a maybe still a higher high being followed by a lower low. I don't know what's going on. Currently, for me, the monthly chart is in no trend. The weekly chart is in a downtrend, and the daily chart has shifted to a fresh uptrend. And if I don't know what's going on in the big picture, I'm staying on the sidelines. I do not want to risk my money on unclear setups, unclear market conditions. I hope you can see that that the setups that I described here, or at least the market environment, let's not talk about setups, the market environments that we saw on both gold and oil were much clearer, much more pronounced, gave a much, if this was a novel to write, the story, the plot would be absolutely clear. Here, this is something where you say, I have no clue what's going on. Who's this guy? I don't know. Who did he kill? I don't know. Was there a murder? This is what I see here on the S&P 500. Fundamentally thinking and the big picture and zooming out, yeah, sure enough, price can drop by quite a bit still. Will this happen? Many mighty people have incentives not to let the markets drop. Have an idea, have an opinion, but then please try to push that opinion aside, at least if you're a technical trader, and then focus on what you see on the chart. And if it's in line with what your theory about what the market should be like, if it's in line with that or not, detach yourself. We want to make money. Let's be right about different things, about your favorite football or baseball team. But with the market, I don't want to be right. I just want to make money. Guys, that's it pretty much for the live part. Let me quickly jump back here. Sorry, already been a little bit over time. But with that bumpy start, I wanted at least to give you guys the content that you came here for. 2019, freshly started. What is one way to make 2019 the best year ever for you guys? You could consider becoming a member here at Nadex. And so why should you consider Nadex for your trading? Regulated, legal for US residents. Binary options, something somewhat like a hot topic. There are different, I don't know what to call them, vendors, offers out there. But the crucial thing here is you want to operate in a completely regulated environment. You don't want to have a trading place where suddenly your money is in the Caymans and you can't connect to it and can't get it back out with unclear jurisdiction and so on. You want to have a good, solid business partner. Trading is a business, and you want to have only the best business partners. And this is clearly when Nadex fits those requirements. CFTC regulated, and it's an exchange. Nadex does not take the opposite side of your trades. You're always trading with other members of the exchange. Nadex provides you with a marketplace. They match buyers and sellers, and executions are transparent and fair. So be absolutely sure that you understand here, Nadex is not your counterpart. They give you the marketplace. And what a marketplace it is, it offers you a wide range of different markets to trade. We just focused here on two of those market types today. We talked about two commodity markets, and we talked about an index market, but you can easily trade forex. Don't forget about those binaries. About cryptocurrencies, economic events, treasury products. It doesn't really matter. You have a huge range of markets available for your trading here, all from one account. No money to shift around, no wiring in and out between different accounts. No, everything tradable from just one single account. And the trading cost is very low and little. The account can be opened very fast, in minutes. Software and data are free, so if you're just getting started, keep the costs low. Trading is a business. You want to make sure that the cost basis here is right. And yeah, pretty much you can't beat free, both for data and software. Very cheap fees, $1 per lot to enter a trade and $1 per lot to exit that trade, capped at $50, 50 contracts. Trading around the clock, 23 hours a day, Sunday, Friday, whenever you want to trade. We have short-term contracts, we have long-term contracts in the market. You pick what time frame suits your style of trading and what you want to do. And we have active markets, small market movements, offers opportunities for us. And one of the things that I truly like, and which really is great, is that you have that perfect risk definition. You have that perfect risk exposure when you open that trade. Know your maximum potential profit or loss completely upfront. And another huge benefit, and this is not on the slides here, trading education. I shared with you guys today what I'm seeing on those charts. However, we have advanced webinars coming up here over those next few weeks where we really put everything together and explain in great detail both how do we look at those charts, what is our strategy to trade the markets, and then how can we implement that strategy using Nadex contracts here. So please sign up for those webinars. And again, it's completely free for you guys. We will never try to sell you anything here during those webinars, completely free to attend. And it's not some kind of brief introduction to the strategies and then you have to come and visit and buy our courses. No, everything is covered here. So completely upfront. And yeah, guys, I've stolen enough of your time already. So thank you very much for tuning in. Hope you liked today's session. Sorry about the bumpy start. Already some motivation to get those quirks sorted out for the rest of the year. Thank you very much for tuning in. To all of you guys, a wonderful 2019, and yeah, make it your best trading year ever.